Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne. We're going to be talking gold over 2,300, silver over $27, making a very strong move, really just to kick off April here. We're also seeing the ETFs that follow the gold and silver stocks closing in on 52-week highs, and really overall everything at some overbought levels, which is actually a good thing, showing that this very well could be a bull market. Now, Jordan Roy-Byrne, founder and editor of the Daily Gold. Let's talk about gold, now over 2,300, silver, now over $27. What, in your eyes, has been the more impressive move? What is something that investors, either that are always invested in this sector or just looking at this sector, need to understand about these moves just in the last month and a couple days?
Yeah, well, hey, Corey, I think that I'd say silver the last couple of days clearing 26 after a big reversal a couple weeks ago. Now it's clearing 26 with ease. That to me, I think is the most impressive thing. Yeah, I may put out a flash update later for my premium subscribers looking at, when we could potentially get a short-term pullback. I need to update some breadth indicators, but, generally, and you said it in the question, when you have really strong momentum and you get overbought after many periods of the market being sold when those conditions are reached. And by the way, the overbought levels, the breadth indicators that we're reaching now, most likely, they're superior to similar levels that were reached, but when the market was in a larger downtrend, or when the sector, I should say, was in a larger downtrend. So when you get into a new bull market, this is what you see. You see really strong momentum. Typically right away, you see very strong momentum. Things are getting really overbought. The breadth indicators are getting overbought. And yes, at some point, we could get, or we will get a short-term pullback. I don't have a strong opinion on that yet, but I would not be, you don't want to be selling into that pullback. You just want to review everything you own, and maybe this could be one of your last chances to get into the higher quality juniors at pretty cheap prices, because it's one thing to buy things after they've gone up 20, 30, 40%. I mean, it's still, well, I mean, if it's gone up 40%, it's still difficult to buy, but you can still buy those. If you think something has 5x, 7x upside over the next couple of years in a bull market, you can still buy it if it's up 20 or 30 or 40%. But if something's up 70%, 80%, and it only has 3 or 4x upside, yeah, you're kind of chasing it at that point. So that's how I look at it. We're clearly in a new bull market. Things are getting really overbought. That's good. Silver's broken above 26. I mean, there's still a couple days to go to confirm a weekly breakout. I mean, I think it will confirm a weekly breakout. So yeah, things are looking good. Hopefully we get a little bit of a pullback in the next week or so that prices on some higher quality stuff will come down a little bit. But I don't suspect it'll be for that long if it happens.
Well, Jordan, just in listening to you break that down, it brings to mind the idea, and we touched on this briefly one time, but it'd be worth reiterating, of having a bull market playbook versus a bear market playbook. And in a bear market, whenever there's a rally or a counter trend rally, they're short-lived. If they do get overbought on the charts, on the indicators, it's best to get out of the way and take some profits. But in a bull market, it's just the opposite. As you said, things can get overbought and stay there a little longer. And there's so many people waiting to buy those pullbacks that the pullbacks are usually more shallow. They don't last long, and they can scorch higher again. So isn't the risk to the upside, and really the risk of people selling too soon, if it is going to be a 5x move in some of these stocks, you don't really want to sell after just a double-digit gain. So maybe break down the psychology around that and how you're looking at the charts in a bull market versus a bear market.
Yeah, it's an excellent question. And I think the things you mentioned, all those things are well taken. If we're just looking at gold and silver, let's just first look at the technicals. Gold had this incredible cup and handle breakout, measured upside target of 2,350 and 2,500. So in the immediate sense, gold still has upside. If we're looking out in the next couple years, this cup and handle pattern, measured upside target of 3,000, the log target, which in historical cup and handles was reached 6 to 12 months after the measured upside, that's about 4,000 for gold. I think if we have a recession and downturn in the next 18 months or so, that could possibly lift gold even beyond 4,000 in the next couple of years. So people need to understand we are in a market now where we are set up to have a spectacular cyclical bull market. I mean, potentially if you get that downturn in the economy. So that people need to understand that that's a strong possibility of what could be coming. You look at silver, it's breaking above 26, which is resistance. So certainly, I mean, there is a chance. I'm not saying I'm predicting it, but there is a chance, gold could do a snapback and come back to 22 or 2150 at some point. That is possible. But getting back to silver it's just broken out. And when silver first you have gold breakout, then silver doesn't typically outperform gold until after it breaks out. Now, I don't know if that started yesterday or today, or if it's going to be when silver breaks above 28 or 29, but there's still a lot of room for both metals to run. Maybe not necessarily in the coming days, but if we're looking out the next couple months, there is a lot of room for them to run. I'm guessing maybe at 2,500 gold and $29 silver, that's when we could see a pullback that lasts more than a couple weeks, potentially. But again, stepping back, there is some really spectacular upside potential in this sector over the next couple years. And we're just seeing the very beginnings of it right now, where markets get really overbought. They make strong moves in a short period of time. But that is what happens in a bull market. Surprises are to the upside. Individual stocks, sectors, markets, they will get overbought. They will stay overbought for a while. And so you need to understand that this is what happens in bull markets, and you're not going to get any huge pullbacks, at least at this point right now. We're not at the, we can look at the charts, look at the breadth indicators, measure how far above moving averages certain markets are, look at where there's strong resistance and assess, okay, well, there could be a multi-month pullback here or a multi-week pullback. But here and now, I think investors need to continue to buy value and just don't chase anything with that in mind. If you're buying something that has good value right now, you're not chasing it. But if something just went straight up by 20 or 30% and you don't understand the value, you don't want to buy that. You're just gambling. That's a bad idea. So that's generally my sense of precious metals markets right now. It's really exciting. I mean, there will be pullbacks, but typically pullbacks are also short and swift. So if you think something, if you say, oh, well, I'll buy this stock when it's down 20%, you probably only want to buy it when it's down 7 or 8%. Like, you're not going to get perfect entry points at this point.
Fair enough, Jordan, but what about the whole strategy here of this seems like still fairly an early stage bull market for the stocks? Why not just go out there and buy the ones that have sold off the most? If they're not going out of business, don't they provide potentially, as long as they have some volume and you can actually trade them, don't some of the most beat down stocks provide some of the best, at least short-term or mid-term upsides when we get this rising tide that lifts everything?
Well, it depends on the fundamental value. And I think we're still early enough in this move that you can still defer to higher quality things. And that's why I said buy value. I would rather buy something that's higher quality at this point than buy something that's lower quality. And there may be something, it could be a permitting issue. I mean, there could be a fundamental issue that will keep those stocks underperforming for longer than you think. So I would still defer towards quality at this point. Now, if we're looking at $34 silver and 2,700 or 2,800 gold, it's a different question at that point. I think at that point, then the quality things may have moved too much at that point that you have to look for the other things that you were talking about. But I think here and now, it's still early enough in this move. It doesn't mean you chase it if it's gone up 20 or 50% in the last couple of weeks. Use some common sense. Have your list of high quality and then buy the ones that haven't moved a lot yet, or maybe they just corrected 10 or 15%. You have to apply some common sense. But yeah, I would still focus on the higher quality stuff at this point. It's still too early in those moves
Well, Jordan, let's break down a little bit further what you mean by high quality, just for people listening in that are trying to build their watch list, or maybe they've just started focusing on the sector again after taking a hiatus. There's the different stage of companies. There's the producers, developers, explorers, prospect generators, royalty companies. There's a lot of choices people have. Which ones do you think right now at this point in the cycle, what are those high quality characteristics you're looking for?
Yeah, I mean, my answer would be really long because it's a different one for each type. So you have to condense it. I mean, I'm most partial to, I think, the growth oriented producers, especially in the gold space. I mean, if something's a developer and I think they're going to build the mine in the next, within the next 2.5 years, I would throw that in there as well. It comes down to value. And in a bull market, you have rising metals prices, in this case, a rising price of gold. The bigger projects are more leveraged than the smaller projects. I know that's a master of the obvious statement. So it's I wouldn't say there's like a specific threshold, because if something was, a really tiny producer and a spectacular value, potentially, I wouldn't necessarily shy away from that. But if you're looking at companies where maybe they can grow from like 100 to 250, or they can grow from, even 250,000 ounces to 500, those types of companies and that type of production growth, I mean, you get really strong leverage. And also the big money, you start to get bigger money in our space, will buy those. And also some, generalist money, retail investors in the US, like they will also buy those. So those can trade at a premium versus maybe smaller producers that aren't growing as fast, or they're just building a small mine. Then it's also looking at the numbers. I mean, which of these companies can grow production without destroying their capital structure? And also, jurisdictional risk is a huge problem. I mean, there's many companies out there that it's not a given that they're going to get the permit and able to build the project. So I would be careful about those. You have to know that these companies can get the permit and actually build it. So that's what I'm looking for in gold. I think in silver, you can look at more optionality, because I think as far as optionality, because silver moves more than gold, silver optionality plays, in my opinion, tend to do better than gold optionality plays. As far as exploration, that's not my forte. I would leave that to someone else. I think there's definitely a huge amount of value there as well. But again, that's not my area of expertise. I would leave that to someone else. I mean, with exploration, like, you really need to own, if you're trying to find a stock that can 10x, 20x, 50x, like, you're going to have to buy a handful of those and hope that one achieves that kind of performance. But in general, I would say, we're still early in a new bull market coming out of a 3.5-year cyclical bear. So in general, there's still significant value to be found in this space. But I will say, once we get to potentially 2,500 gold, 28, 29 silver, there's going to be a lot less value. I guess this move that we're seeing, like in the last couple of days or in the last week or so, maybe it continues for another week before you get a correction. This is starting to, I mean, there's incredible value out there, but in a couple of weeks, that could really dwindle, in my opinion, at least in the higher quality stuff.
Oh, well, just look at how much these stocks have sold off. All you need is a chart that goes back about 4 years, and we can see how much these stocks almost across the board have sold off. Jordan, with all this optimism right now, are you comfortable saying this is the time to be fully deployed, fully invested in precious metals stocks, as long as you want to be in them, rather than having really any cash on the sidelines?
Yeah, I think this is the time to be fully invested. Something I've been telling subscribers in the last couple of weeks, and I might do over the next week or so, is kind of trim a few things here or there if they're, not performing as well, or you can find a better replacement. I think that's how you manage a portfolio if you don't have any cash. And that's just an important concept in general. You should always be reviewing your positions and comparing them against each other, because you'll probably find, oh, well, I don't own this stock, but this has a lot of potential. But this stock in my portfolio has the same market cap, but doesn't have the same amount of potential. I should replace that. So I think that's one way to build cash. If you are just getting into the sector and you have too much cash, the best thing to do is just buy small amounts of things. Don't buy full positions, just slowly buy small amounts. You'll probably get some kind of a short-term pullback in the next week or two. And as you're buying in small amounts, then if you get that correction, you can buy in a little bit bigger amounts. But that's how you can get positioned if you're, if you have too much cash at this point, because I wouldn't expect, again, there is a scenario where you could get a snapback to 2100 or 2150 gold, because it has happened in 2 of the past 6 or 7 breakout moves. But at this point, it's definitely way more risky to wait for that than to start buying now in small amounts.
All right. Hey, Jordan. Great chatting with you. Look, this is just a much better environment, one that we were even pointing out last month as the stock started to move. The larger boys started to move on higher volume, and gold actually broke out and held that breakout. Now silver's following along, and a lot of the stocks, well, pretty much all of them have rebounded here, some more than others. This does look very encouraging for precious metals investors. I know we were waiting for this for years. Now it seems to be here, so now hopefully we can all start to see some significant gains in those portfolios. We'll post a link to Jordan's site, The Daily Gold, and we'll also follow up with Jordan next week. Thanks for your time today, Jordan.